Welcome to tutorial 7 of finance and accounting. In this tutorial, we will get deeper into the categories of accounting. I want to indicate that these tutorials are ideal for everyone all over the world, including students, managers, CEOs, directors, business people, entrepreneurs, university students, teachers, lecturers, everyone all over the world. Now, let us describe one category of accounting which is called financial accounting. What is financial accounting? Financial accounting is the science of recording financial transactions and analyzing the effects of these financial transactions or business transactions and providing financial information which is reported in the form of financial statements. And these are the statements, that is, financial statements, which are going to be used by different parties outside the company, such as investors, stockholders, and others. What is crucial is that this type of accounting, it is meant to provide financial information for use by different parties outside the company. Now let us deal with the second category of accounting, which is called cost accounting. What is cost accounting? Cost accounting is the science of computing production costs or production expenses of goods and services. And these are the goods and services which are the cornerstone of the business entity. That is what the business is providing to the entire public, to the customers, so that it remains in business. So, cost accounting is there to compute all those production costs of goods and services which are provided by the business entity, as well as developing cost control and cost reduction systems. That is the purpose of cost accounting, for decision making purposes. So, cost accounting, basically, it is meant to assist the company management in their planning purposes, in their budgeting exercises, as well as exerting internal control measures. In other parts of the world, they refer to cost accounting as, when they implement such measures, they say it's belt tightening. So through cost accounting, the company's financial performance can be judged just by making comparison between the input costs and the output that has been generated from the implementation of such costs, in order to determine whether there was any form of prudency in the decisions taken. Now let us discuss two crucial components of cost accounting: the variable costs, number one, and number two, the fixed costs. The more we deal with cost accounting, we'll get to know even other different types of costs and classifications. But for now, let's understand that cost accounting encompasses variable costs and fixed costs. What are variable costs? Variable costs are the costs or expenses that change according to the production levels or sales volumes, which means when the production levels or production volumes increase, the variable expenses or variable costs, they also increase. When the sales volumes increase, the variable costs also increase. When the opposite happens and the production levels or the sales volumes decrease, the variable costs, they also decrease. Let's take an example of the expense called supplies expense. When we buy supplies for a particular purpose, let's say for further selling such supplies, let's say we are selling stationery, and the supplies, the more we buy supplies for further trading them, for further selling them, the more will be the costs, there will be the variable costs attached to these particular supplies. The more will be the supplies expenses. Let us get now into the fixed costs. What are the fixed costs? The fixed costs are the expenses or the costs which remain unchanged, steadfast, constant, irrespective, regardless, notwithstanding the production levels. They are not shaken by the production levels. They are not shaken by the sales volumes. And these costs are mostly related to a certain period of time, probably a year, a week, or a month. Like, for instance, salaries and wages is one type of fixed cost. If the company is paying monthly, the period of fixing such costs will be monthly. If the company is paying weekly, fortnightly, which means the period of fixing such costs will be weekly or fortnightly. We will make quite a lot of examples around these particular types of costs. But it is very important that when we start to apply them, then you mainstream, you understand everything. When the company or the business entity decreases, take a decision to decrease the business costs, the first types of costs to be decreased will be the variable costs, because it is not easy to change the fixed costs, as I have indicated that they are constant, they are unchanged, they are steadfast, they remain like that. So the first thing to do, the company or the business entity will then change, increase or decrease the variable costs, because it is easy to work with and change, and because of the level of flexibility at any point in time. Now, these two types of costs, the variable costs and the fixed costs, together they are called total costs, which means when you describe the total costs, what are total costs? Total costs are equal to variable costs plus fixed costs. Now let us deal with a third type of cost accounting, which is called managerial accounting. What is managerial accounting? Managerial accounting is the science of identifying, measuring, analyzing, interpreting, and communicating the financial information to managers of the company so that they take a well-informed decisions. They take well-informed decisions. The focus is on the company's internal decision makers, the management the directors of the company, because they've got the responsibilities of controlling, directing, and managing the company with the greatest levels of efficiency. Managerial accounting helps the management of the company or business entity to prepare and present financial information to the owners of the company, the shareholders, the stockholders. It helps the management with the entire planning exercise, with their controlling mechanisms, systems in place, organizing, policy formulation, developing strategies in order to better focus the business entity. It helps them with all that. These tutorials are offered by Pitram Tech. Please subscribe, like, and share. Please also check other tutorials of Pitram Tech.